Trump's trade war, a roller coaster ride of tariffs and tweets. The world watched with bated breath this week as President Donald Trump ignited a global trade war, a dramatic escalation with potentially devastating consequences. His initial pronouncements were stark, unwavering, and deeply unsettling. On social media, he declared, "My policies will never change," a bold statement that seemingly solidified his commitment to sweeping tariffs on a multitude of U.S. trading partners. This declaration, delivered with Trump's characteristic bravado, sent shockwaves through global financial markets. Stock markets plummeted, mirroring the growing unease and uncertainty gripping the international community. Retaliatory threats from affected nations echoed across the globe, painting a grim picture of escalating economic conflict. The ensuing chaos was immediate and palpable. The president's decision to impose a blanket 10% tariff on goods from numerous countries, escalating to higher rates for specific markets the following week, triggered a near-instantaneous sell-off. The impact was swift and brutal, leaving investors scrambling to understand the implications of this unprecedented economic gamble. The gravity of the situation could not be overstated. This wasn't a minor adjustment to trade policy. It was a seismic shift with the potential to unravel decades of carefully constructed global economic relationships. The president's justification was familiar: a fervent promise to revitalize American manufacturing and bolster the U.S. economy by bringing trillions of dollars into the federal treasury. He painted a picture of a resurgent America, unshackled from the constraints of global interdependence, and a return to a bygone era of robust domestic production. This narrative, however, sharply contrasted with the warnings issued by countless economists who predicted economic chaos and significant price hikes for consumers. Their concerns weren't based on speculation. They were grounded in the potential for supply chain disruptions, increased inflation, and the risk of a global recession. Yet, within hours of his defiant pronouncements, a surprising shift emerged. The president, ever unpredictable, hinted at a potential course correction. A cryptic yet significant post on Truth Social revealed a conversation with Vietnam's General Secretary To Lam. Trump wrote, "Just had a very productive call with To Lam, General Secretary of the Communist Party of Vietnam, who told me that Vietnam wants to cut their tariffs down to zero if they are able to make an agreement with the U.S., adding that he looked forward to a meeting in the near future." This unexpected development left analysts and market watchers scrambling to decipher its implications. Did this mark a softening of his stance? Was this a strategic maneuver, a calculated attempt to mitigate the immediate backlash while maintaining the appearance of unwavering resolve? The uncertainty surrounding the president's intentions only amplified the market's volatility. The initial plunge deepened as investors grappled with the contradictory signals emanating from the White House. The stark contrast between his initial unwavering declaration and the subsequent suggestion of negotiation fueled speculation and further exacerbated the market's downward spiral. The world watched, breathlessly awaiting the next tweet, the next statement, the next unpredictable move from the man who had thrown the global economic order into disarray. Meanwhile, the international community reacted with a mixture of outrage and apprehension. China, a major target of the tariffs, responded swiftly and forcefully. Industry associations across the country condemned the move, with the National Textile and Apparel Council issuing a statement declaring its support for the government's retaliatory measures. They pointedly accused the U.S. of undermining the resilience of the global textile industry's supply chain, underscoring the far-reaching consequences of Trump's actions. The statement served as a potent reminder of the interconnectedness of the global economy and the potential for widespread repercussions from unilateral trade actions. Within the U.S., the reaction was equally divided. While Trump's supporters lauded his strong stance on trade and his commitment to protecting American jobs, critics expressed alarm and frustration. Democrats, in particular, condemned the tariffs, citing the potential for devastating economic consequences. Illinois Governor J.B. Pritzker, for instance, took to X, formerly Twitter, to denounce the tariffs as the biggest tax hike in American history, and accused Trump of throwing the American economy into turmoil. His statement reflected a growing sentiment among Democrats and many economists that the tariffs were not only ineffective but actively harmful to the U.S. economy. Adding to the complexity of the situation was the response from Secretary of State Marco Rubio. In a carefully worded statement, he attempted to project an air of calm amidst the storm, assuring reporters that the markets would eventually adjust to the new reality of Trump's sweeping tariffs. His statement, while seemingly reassuring, failed to address the underlying concerns about the long-term economic stability and the potential for a protracted trade war. Rubio's comments highlighted the administration's struggle to manage the fallout from the president's actions and to maintain a semblance of control in the face of escalating international tensions. The unfolding drama underscored the inherent risks and uncertainties associated with Trump's unpredictable leadership style. His impulsive decisions and erratic communication further amplified the existing market volatility, leaving businesses and investors to navigate a landscape of ever-shifting rules and unpredictable outcomes. The situation serves as a stark reminder of the high stakes involved in international trade and the potential for devastating consequences when unilateral actions are taken without due consideration for the interconnectedness of the global economy. The days, and perhaps weeks, ahead promise further volatility, leaving the world to grapple with the implications of Trump's bold gamble on the future of global trade. The situation remains fluid, and the long-term consequences of this trade war are yet to be fully understood.